FIIs are withdrawing, so rupee is falling. Rupee is falling, so FIIs are withdrawing. These two statements reinforce each other. I asked AI for a timeline, and this is what it gave me. It starts from late 2024. The FIIs are viewing Indian stocks as expensive with a Nifty PE ratio of 24 times. The Chinese market was relatively cheaper at 10 times PE. This was one of the reasons for withdrawal. Also, the quarter two growth of India was 3.6%, which was the slowest in 17 quarters. In January, the government's advanced estimates revised financial year 25 GDP growth downward to 6.4% from 8.2% in 24. So, relatively, the Indian economy was looking unattractive to FIS around this period. On January 2nd, 25, US announced its intention to charge tariffs. And this was the month of shock. 78,000 crores were withdrawn by FIIs in January, 34,000 crore in February. Around this time, the US 10-year Treasury yield hit 4.73%. The risk-free debt return was more attractive than the emerging market equities. Investors moved massive capital towards US markets in anticipation of Make America Great Again policies, which were expected to boost US business profitability, sucking liquidity out of markets like India. So the year 2025 saw a net sale of over 1.58 lakh crore of Indian securities, and the sell-off continued even in January 26. Assume an FII invest 1 lakh dollars when the exchange rate is 85. His investment in rupee terms would be 85 lakhs. After investing for 1 year in stock market, the stock market gives him a return of 10%, say 8 lakh 50,000. His total investment in rupee terms is 93 lakhs 50,000. Now, if he wants to withdraw his capital, the exchange rate, meanwhile, has gone down to 92. Rupee has depreciated by 8%. To convert 93 lakhs 50,000 into dollars, he has to buy dollars at per 92 per $1. The amount when converted to dollars would be 1,01,630. So his 1 lakh dollar investment at the end of 1 year in dollar terms would be 1,01,630. He has made a return of only 1.63%. This is the month-wise dollar rupee exchange rate of the year 2025. Other than FII's withdrawal, the other factors contributing to a depreciating rupee is the oil import, gold imports, the rising gold and silver prices, and by and large, an excess of import over exports.